All right, hello everyone. I hope that Michael also joins me as soon as possible because we have to discuss the US preliminary GDP data, which is out in about 9 minutes already from now. So, as you can see on my screen at the current moment, the forecast stands at 0.4%, while the prior figure was at 0.7%. And if we talk a little bit about the projections and also the history of the indicator, here it's crucial to mention that the last quarter is not reviewed as spilt milk. It was a bad quarter, but things are now looking much better. The Federal Reserve Bank of Atlanta's real-time GDP Now model forecasts a growth of 2.5% for the first quarter now. The second estimate of the fourth quarter GDP is expected to show an even, however disappointing, end of 2015 for the U.S. economy. Expectations for the fourth quarter GDP growth is to hit for 0.4%, down from the 0.7% first reported last month. Personal consumption is expected to remain steady at an annualized pace of 2.2% in the fourth quarter. The weak fourth quarter is not enough to turn the Fed away from its tightening bias as long as the economy keeps humming in 2016, of course, and the recent inflation and labor market data have also been encouraging. So, what do we have here? We have the experts from different banks and financial institutions, and of course, as always, according to their views, we have the Bloomberg survey summary, where the median estimate stands at 0.4%, average 0.421, highest estimate is 0.9, and the low estimate is 0.1%, while the total number of estimates has reached 81 this time. And of course, I have a couple of quotes, this time from where do I have it? Credit Suisse. So they say that the most current data available suggests that economic growth came to a near standstill at the end of the last year, at least in the aggregate. That was the opinion of the economists of Credit Suisse. And then they also add that they estimate that the BEA will restate annualized Q4 real GDP growth as plus 0.2% below the advanced estimate of 0.7%. The sensitivity of investors to such an outcome likely to depend on the behavior of the financial markets in the days leading up to the GDP release. Near zero reading on Q4 GDP will not be taken well in an environment marked by renewed risk aversion and panic, but it may be excused as old news against the calmer backdrop. That was the opinion from the Credit Suisse. Let's move on. And we have, last but not least, Dukascopy community member sentiment on the USD versus Japanese yen currency pair. And as you can see on my screen, traders went a little bit more bullish this time with 56.79% versus the 43.21% bearish votes. And here you can see a couple of comments, and again, I'm not going to read them because I have to pass the floor to Michael, who will cover the technicals for you. So, Michael, go ahead.
Hello everyone once again. So for today's trade release we have the euro-dollar currency pair with a positive surprise trading strategy, so expecting the to fall in line with expectations or to be slightly better, maybe perhaps than expected. Oops, accidentally moved away the take-on stop loss levels. So the market sentiment for the given pair is quite close to the neutral one, as almost 51% of all open positions are long, and the remaining 49 are short, while the euro is being sold almost in 0.5% of all cases, namely 50.57, while the US dollar is being bought in the majority of 55.72% of all cases. Talking about the pending orders, in the 50 pip range, it's 52.26% to purchase the euro, while in the 100 pip range, it's 52.48% to sell the euro. So other market participants, however, are bearish on the euro dollar, with Oranda having 51.51% of traders holding short positions. Saxo Group has a bearish sentiment of 60.19%, and the daily FX has a 53% bearish sentiment. Moving to the market reaction table, where we have the reactions for the euro dollar on the previous GDP releases. The second estimates. The largest reaction was 36 pips, and the smallest one was 16. We also see that the data mostly surprised us with stronger figures than anticipated, with the data falling in line with expectations in the previous release. So there is a good chance that we will see a stronger reading today as well. And plus, there is a lot of secondary data that is due at the same time, and the forecasts for that are also positive, so it might bolster the initial reaction, which is, by the way, approximately 24 pips, the expected reaction from today's data. And based on this reaction, we can set the take profit and stop loss levels accordingly, which are, as you have noticed, located the stop loss at 1.1035, right between the 100 and 200 period simple moving averages. Also, the upper Bollinger Band is close by, so this is a rather strong resistance area, and should limit the losses in case, well, in the Eurozone with gains, in case we do see a worse figure today, while the take profit level is located at 1.0987, right on top of the daily S1, and maybe somewhat the 4-hour S1 as well. So also bolstering this support area, and in case the data doesn't fall in line with expectations, we should see a decline closer towards this area. And with only like 35 seconds to go, I'll mention the technical indicators, which are mostly giving us bearish signals, with the bullish one only in the weekly time frame, and mixed signals only in the 4-hour and the 10-minute time frames. But the most important one is the 30-minute time frame indicator, because it was updated specifically for the given data release 30 minutes ago, and it's giving us bearish signals, so bolstering the possibility of the negative outcome, speaking about the reaction. And concerning some of the Bloomberg forecasts, the IHS Global Insight, which is the top predictor of the GDP data, they actually expect a 0.5% reading rather than the 0.4. And we are seeing the pair slightly going to the downside already, so I'm guessing the data is out, but the reaction is only 13 pips and will probably edge lower in the upcoming minutes. So yeah, actually 14 pips at the moment. And yeah, that's because the data actually disappointed us. The GDP is 0.1% rather than this 0.4 as it was surveyed. And personal consumption also disappointed and grew only 2.0% rather than 2.2. What was better was the core PC price index, which is 1.3%, and the goods trade balance also slightly disappointed. So rather weak data, but nonetheless we see the initial reaction to the downside, but not as strong as we hoped for, only 15 pips. So I'm guessing the Eurozone will grow in the upcoming minutes eventually because of the rather weak GDP figure. And that's all from my side, and back to you, Kate.
Thank you very much, Michael. So yeah, guys, you can see the reaction on the screen and also the numbers in the chat section, which came out slightly disappointing us and missing the expectations coming out at, I'm sorry. Sorry, yes, you can see the numbers in the chat. And since my voice is letting me down, I have to say bye to you and see you later. Bye.